While Nigeria's central bank has revised downward its initial figure on foreign exchange, the amount is $1 billion lower at $40.28 billion. In the meantime, Nigeria's federal government has reiterated its commitment to the development of the railway as a viable means of transportation across the country. This according to This Day Online. The development of modern railway infrastructures will ease the present over-dependence on road as the main means of persons and goods movement across the country. Well, joining us now on the line from Nigeria is Akinyemi Shonubi, director at Riverbank Capital, and we're putting in focus the gas sector over in Nigeria, of course, oil and gas sector. Thanks so much, Akinyemi, for joining us on the line this morning. Let's get straight into a discussion that we're having around, while demand for commodities may be slowing, it hasn't really put a dampener on the fact that you've got international companies, specifically within the oil space, still searching for new opportunities, looking to leverage off possible opportunity in the long run. Akinyemi, what kind of trend are you noticing with regards to investment by international oil companies within the oil and gas space?
Thanks, Alishia. I think regarding Nigeria and West Africa, you have the international oil companies trying to refocus their investments in offshore. So in the last 2 years, we've seen divestments of oil blocks by a consortium of oil companies, including Shell, Egypt Total, with the NNPC as part owner. They've sold about 7 acreages, and we see about $2.6 billion in that process. And part of what we understand they're trying to do is to move from a lot of onshore concessions to offshore concessions where they have a bit more better terms. Even if it's more expensive, they have supposedly higher reserves across West Africa, I should say. So that's sort of the trend we see, not just in West Africa, but you've seen a lot of investments in gas in East Africa, Kenya, and in Mozambique.
Let's really emphasize the kind of impact this is then having on indigenous players within this space.
Well, we've had in the last 2 years, like I said, in the last 2 years, those divestments by Shell, for example, is creating a slew of really big-size indigenous producers. Some of them come out reserves as much as 1 billion barrels. That is from companies that were producing just about 15,000 barrels. They're anticipating that in the next couple of years, once they develop their assets, they will be producing close to 50 to 100,000 barrels a day even. But not just on the producers, it's going to have a huge impact on the service businesses and provisions of rigs and fluid services, drilling services. In the last 2 years, we've seen an increase in local content, as they say. A company called Nigerdoc has built platforms for mobile. A company called SEC has built pipelines for a gas project. We have Bristol Helicopters. We have, a company called Caverton Helicopters has supplanted Bristol as a major air contractor to Shell, and the marine business, we see companies like Geofluid acquiring assets. So having 7 assets falling into the hand of indigenous producers is actually going to increase a lot of participation by indigenous or energy service contractors. Not to talk about the impact on the banks. Like I said, about $2.6 billion in sales in future development might actually top those numbers, and a lot of Nigerian banks are jostling and positioning themselves. A lot of them participated in the acquisition or in the divestment, I should say, and they are going to participate in the development of those assets over the next 5 to 10 years. So we think that the impact in Nigeria is very good.
Of course, this kind of activity, as you say, it has a significant ripple effect. You've touched on the kind of impact it has within the financial arena, increased financing activity by Nigerian banks specifically. With all this activity, up and away, what it does is it puts pressure on government regarding new regulation. So really regulating this environment so that it, at the end of the day, plays in Nigeria's favor, in the economy's favor. A lot of emphasis on the petroleum industry bill and the gas master plan itself.
Absolutely, Alishia. You find a situation where whereas the petroleum industry bill, the gas master plan, a lot of those plans and some of the controversial elements, the federal government now has to consider the impact on indigenous players. And indigenous players have more access to they can play a better advocacy role, I think, better than international oil companies who sometimes unfairly have developed a bad reputation in their operating environment. So the government needs to be a bit more careful, a bit more thoughtful. A lot of the powers, some of the more arbitrary powers to revoke licenses, to delay renewals, and things like that, that are in the current PID, for example, needs to be rethought. And we think that in the next session of the legislature, there's going to be a robust debate about that, and some of those provisions might actually disappear. And we're looking forward to a better industry because of indigenous participation.
Just how much of that, Akinyemi, before we let you go, trickles down and has a downstream or an effect on downstream developments?
Well, they sort of move hand in hand. The PID is a wide bill that covers or replaces about 16 or 17 different previously passed acts. And the downstream is no exception. It brings in new regulators, or at least it restructures the regulatory environment. And it also eliminates some of the so-called subsidy funds, like the Petroleum Equalization Fund. Or at least it gives the minister the leeway to do away with the Petroleum Equalization Fund. What I see is a signaling that the federal government has already indicated they would like to do away with subsidy regime so that you could actually get investment into the country. We don't really have a functioning midstream section, and that's why that dislocation between upstream and downstream actually occurs. With indigenous participation, with pressure, with companies, for example, that are integrated, like the likes of Oando, who are making investments upstream, downstream, and would like to make midstream, there is pressure on them on the federal government to actually have the industry properly structured so we can attract foreign investment and reduce the pressure we have currently on importing refined products for much of the year, Alishia.